Welcome to Chart Detective, where we let the charts speak for themselves. In today's presentation, we'll be looking at Cameco Corporation, and we'll be doing technical analysis. So we'll take a deep dive to see how the company had performed in the past, how did it perform last month, January 2025, and what do we expect from it in the near future. This is a ticker symbol, CCJ, and we're looking at this chart from June 2020 all the way to December 2024. And these are weekly candles. Initially at the beginning of 2024, stock was not doing so well. The low was at about $35 and the high was above 60. And the stock finished the year up by only 2%. However, if we were to look at it from the COVID low, which was in 2020, the stock was trading at $5 until the end of 2024. The stock was up by about 800%. Now let's take a look at how did the stock perform for the month of January 2025. Started doing well until last week. Stock went down by 15% because of the deep six scared that spooked the US stock market. So Cameco was down 15% on that given day, and it went down to about $47. So this trend line shows exactly why the price is not going any further, because we had a support line at about $47. And on December 31st, which was last Friday, the stock closed at $49.44. And the stock was down by about 4% for the month of December. Now let's take a closer look at what happened last week when the stock gapped down on Monday. On the previous day, on Friday, the 24th of January 2025, we see a bearish engulfing candle, meaning that the first candle is smaller and the second candle, which is red, is a lot larger, and it completely engulfed the green candle that was done on the previous day. So that was a bad sign that the market was on its way down. And this is exactly what we see on the previous day on Monday when the market opened. The stock gapped down. So this is the bearish engulfing, and we see that's the gap down that happened. And this candle here is a very bearish momentum candle. However, on the next day, when we look at what happened, we see a hammer. Hammer are normally a reversing candle if it's located in a supporting point. So that's exactly what happened. So we see the trend reverse after the formation of that hammer. However, on Friday, January 31st, the stock closed down. Why? Because President Trump had announced that he's placing tariff on Canada, Mexico, and China, and we know Cameco is a Canadian company. So what's our target for the next few months? for the company. We expect the company to go up to its previous high, which was set in December of last year at about $62.50, which meaning that we need the stock to move up by about 25%. So this is our expectation. Now let's take a look at how this may happen. So we expect the stock to move up below $57 and stop right there. Why? Because we have resistance at that point. So from there, we expect the bears to move the price down to about $50 where we would meet support. And the bulls are expected to step back in and move the price higher to about $58 where we have resistance. The previous resistance line will become support, and we expect price to move back down to about $53 where we have strong supports. So we have two support lines forming that strong supports which we just mentioned. And from there we expect the price to move up to its previous high at $62.52 where we have resistance. So this is our expectation for Cameco.